In 2 days, the world lost $10 trillion.
Charles, almost $10 trillion in stock market losses so far.
$10 trillion and a market as unstable as Kanye West. Ever since Trump took office, the United States has been on a roller coaster ride. From politics to the economy to trade, it seems like the entire nation has been desperate for a moment of stability. But Trump's latest outburst might have made that nearly impossible, especially after the whiplash he caused on Monday. In the latest twist of his ongoing trade war, Trump issued a warning to China: rescind all retaliatory tariffs or face even harsher penalties. And like many of his past declarations, this one came with a dramatic threat. Instead of easing tensions, Trump doubled down, ignoring appeals from dozens of governments and boldly stating, "We're not looking at that. We're going to have one shot at this, and no other president is going to do what I'm doing." After already slamming many U.S. trading partners with a 10% tariff unprovoked, Trump made the situation even more heated by punishing some countries, especially China, with import taxes as high as 46%. Why single out China? Trump has been targeting China one way or another ever since he's gotten into office, because China had the audacity to hit back. That's right, ladies and gentlemen. China's crime was to match Trump's temper tantrum by making a bold move, much like the U.S. president. In response to U.S. tariffs, China imposed a retaliatory 34% tax on U.S. imports. Unsurprisingly, the U.S. didn't take kindly to that move. Now, unless China backs down, Trump is threatening to escalate even further with a massive 50% tariff starting as soon as April 9th. And yes, just like every statement Trump makes, this one also has no room for negotiation. But what effect does it have on the American economy? Well, for starters, consumer goods are intended to be far more expensive, as the US tariffs on Chinese goods are expected to be as high as 104%. So whether it's mobile phones, chemicals, garments, or machinery, anything that has anything to do with China isn't going to be affordable for the regular American anymore. You might think, oh, that's not a big deal. It's not like we depend a lot on Chinese goods for our everyday life. Your opinion might change drastically after finding out that all these regular schmigalar, everyday Americans have bought stuff worth $400 billion in 2024 and have made the economic enemy nation its second biggest source of US imports right after Mexico. And of course, with heated exchanges like that, the stock market has been going through quite a bit of instability, as the S&P 500 is at least 18% below its mid-February peak and has fallen 0.2%. As if things weren't bad enough, a piece of false news ended up making the investors hopeful, or one might even say borderline delusional, that Trump had considered pausing the trade war. Now, this caused a very predictable spike in the market. In fact, a $10 trillion wipeout in global equities between April 2nd and April 9th was seen when the investors saw the slightest glimmer of hope. But of course was very short-lived, as the day ended with stocks plummeting. That happened immediately after the White House clarified that Trump has no plans of slowing down or showing leniency whatsoever.
Do you agree with Secretary Bessent, who has suggested that the current standoff with China is not sustainable?
We're doing fine with China. We're doing fine with I think almost every country. Everybody wants to have involvement with the United States. As you know, we were losing $5 billion a day when, during the Biden administration, during that last year, was a horror show what they were doing on trade. $5 billion a day. And now we have it down to a very low number because we're getting 25% from the automobile industry, from autos. We're getting 25% for steel, 25% for aluminum, and we're getting the baseline of 10%. And think of it, we're losing almost $2 trillion on trade. And those days are gone. We're not going to do that again. We're not going to let that happen. We're being ripped off by almost, I don't say every, but very close to every country, everywhere in the world, just being ripped off left and right. You had no leadership. You had people that didn't know what they were doing. And we're going to turn the country around. You know, we have a very nice phrase, make America great again. That's what we're going to do. And
also, despite Trump's no negotiation policy, the administrations of multiple countries like Japan and Vietnam have approached the U.S. government for pleas of leniency. However, according to Kevin Hassett, director of the White House National Economic Council, if they come to us with really great deals that advantage American manufacturing and American farmers, I'm sure he'll listen. After decades and decades of mistreating American workers, it's going to be tough to get him to decide to really come to the table and sign on the dotted line. But if the international parties are suffering this badly, what's the situation of major stakeholders in the U.S. economy? According to Jay Foreman, the CEO of Basic Fun, a well-known toy company, a total pause has been implemented on all shipments from Asia due to the tariffs by the Trump administration. I cannot risk putting any product on the water that might incur, at this point, a 54% to 104% tariff. It's one thing to try to absorb or pass along 10% to 20%, but 54% to 104% is impossible. The consumer will just shut down. In fact, several investors have reacted to the economic instability and the potential start of a recession by selling off their U.S. Treasury bills, which are considered some of the safest investments. This is a sign that some of the oldest and most skilled players have lost faith in the U.S. economic system and are planning to reach out to foreign countries in Europe and Asia for investments instead. Not only investments, but the value of the dollar seems to be tanking as well in the Trump presidency. The People's Bank of China, known to be the central Chinese bank, made a bold move by setting its reference rate at 7.2038 yuan against the dollar. Since September 2023, this is the weakest the yuan has been, and it only got worse as it hit rock bottom in 19 months. Despite what it looks like, this was a strategic move made by the Chinese government. While Trump tried to dominate China with the tariffs, China knocked down its currency to boost the sales of its companies to other countries, including the United States. However, there's a certain limit to which China can knock down its currency without irreversibly damaging its economy. Chinese suppliers have already made their dismay known to Walmart, one of the biggest names in American retail. Walmart's been asking the suppliers to cut their prices up to 10%, causing them to suffer even more because of the tariffs. However, in a recent social media post, Chinese TV broadcaster Yu Tantian criticized the corporation for its unfair request by saying, "Walmart's demand for Chinese suppliers to bear the full tariff burden is unreasonable and disrupts fair competition and international trade order." After this little request by Walmart, Chinese manufacturers have prominently stated on social media how the US companies need to stop expecting leniency from them just because their government's policies are volatile and that they have no room for leniency. Looks like Walmart is playing the long game, because not only are they indirectly pressurizing Chinese suppliers for price cuts, but they've also started looking for other product categories to sell in order to reduce the financial damage caused by the government as much as possible. And of course, this happens right after Walmart CEO Doug McMillon mentioned in February that the corporation is well equipped to get through the tariff mess. According to McMillon, tariffs are something we've managed for many years, and we'll just continue to manage that. We've got a great team. We know how to do that. We can't predict what will happen in the future, but we can manage it really well. And we're wired to try and save people money. And Walmart isn't the only one to play it safe during the Trump administration's trade war. Its competitors like Costco and Target have also started negotiating with suppliers for lower costs. In fact, Target is even willing to go 50-50 with the suppliers in tariff costs. From roller coaster trading days to jittery investors and frustrated trading partners, it's clear that uncertainty and panic aren't temporary during the Trump presidency, and it might just become the default. After a $10 trillion upset, what's the next damage going to be? Can the US afford to be that adamant with China, considering its trading situation, or will Trump take a step back? Tell us what you think in the comments below. With that being said, that's all for today's video. Make sure to hit the like and subscribe button and turn on the post notifications so you don't miss any updates. See you in the next video.